Good morning, everyone. It's Tuesday, September 9th. It's Ben Buckner with Ag Resource Company in Chicago coming at you with all the market news. We got markets a little bit weaker this morning. It kind of follows some kind of choppy trading, a little bit of strength overnight and very early this morning. And I think that's still kind of our idea at Ag Resources. We'll call the markets kind of weighty. The weight of trade policy uncertainty, tariffs, harvest progress, which is imminent in the principal Midwest and is expanding northward into places like Kentucky, the very far southern Midwest. We've talked a lot in the newsletter, at least, too, about the sort of the cash market evolution in places like the Northern Plains, sorghum cash prices, hard red winter wheat cash prices. So again, from a very big picture, it's still up to a weather threat in the southern hemisphere, which we don't see one today, or increased exports through U.S.-Chinese trade policy or other markets. So it's finding trade deals. It is whether to be real meaningfully bullish of these things. And so I think it's still dominating. The rest of the week will be positioning ahead of the USDA report, of course. Kind of revisiting chart patterns as well. December corn and November soybeans, for that matter, look exactly the same as they did about a week ago. So it does seem like both the bulls and the bears, both willing to make their case or afraid to further press their case. So December corn is pretty clearly, for now, and probably into Friday morning, stuck between 20 and 50-day moving averages. 100-day moving average, of course, pretty strong resistant. So it does seem like we're trading very narrow range, call it 418 to 424. Who will win this battle in the long run? And we think that in the short term, it comes down to the USDA's yield. Will it be above or below 185 bushels per acre is probably the demarcation there. That drives things short term. November soybeans, can they still find support on breaks to 1025, 1030? That's going to be a big question for us. But again, just wanted to communicate from Ag Resource. We think the weightiness of the markets probably continue, and we still have to get through, I think, the very tail end of the growing season. And do want to, acknowledge that we are probably going to be without meaningful rainfall in a lot of places, especially the eastern Midwest, the mid-South, through the very end of the growing season. Just the position of high pressure aloft the Atlantic's not really cooperating. You see, it's very, very wet off the East Coast. That water should be in the Midwest, but it's not. So the end of the growing season, moisture deficits getting wider, not getting narrower, at least east of the Mississippi. There's hope for rain, kind of northern plains, western corn belt, September 19th or so onward, but it's getting late to really, I think, for moisture to matter anyway. As for U.S. weather as well, it does look like the growing season, for what it's worth, will be extended in places like the Dakotas, Minnesota, and the Canadian prairies. It will start getting warm today, stays abnormally warm, probably into the end of the month. And really, that's something in the U.S. climate that's been a feature of the last couple of years. It's spring slower to evolve, but autumn has been getting warmer. And so I don't think there is meaningful risk of frost. And if we can avoid frost for the next 10, 15, maybe 20 days, that risk drops to zero. So U.S. weather is mixed. Also wanted to highlight the tropics just being abnormally quiet today. There's really nothing on the horizon in the Atlantic. So, again, that prevents Midwest moisture relief. But I do think those Gulf, Delta, and Southeast crops will be harvested without any obstruction, based on hurricanes. Those can be pretty damaging in that part of the world. When we think about the USDA report, though, we are still of the mind that the USDA September yields, the first, of course, that future objective yield data, will be historically elevated. And so I think it's just providing the framework of probability. So the U.S. corn crop on Sunday rated 68% good to excellent. That's compared to about 62% on average, still above last year, still pretty historically high if we look at the last decade or really the last 2 or 3 decades. And so if you put that together along with vegetation health, which we talked about yesterday, let's look at the probabilities of what we see in September and really by the final report in January. So let us isolate the last 2 decades. Years that the crop was rated at least 65% good or excellent in the first week of September, and see what happened. So you can kind of see all years but one that was the case. 2010 has always been this boogeyman. Has been above yield, anywhere from 2 to 15%. So let's call it even 2 to 4%, still probable to us. And that's something to think about. Even a yield of 186, that is the trade's average guess, that is just under 3% above the 20-year linear trend. And so I think mathematically pretty reasonable. Again, so we don't expect major revisions to the U.S. corn yield to the downside, at least in the USDA September report. Soybeans similar. Kind of we look at crop rating 64% good excellent, below last week, a little bit below last year as well, but still way above average, which is about 59 or 60% historically in the first week of September. Let us isolate years that the U.S. soybean crop has been rated 60% good, excellent, or better. The first part of September, you can see all years, but last year, of course, we do acknowledge that you do find final yields anywhere from 1 to 10% above trend. So let's think about something like a 53, 53 and a half. That is just over 1, maybe 2% above the 20-year linear trend. So again, have threats been big enough? Also want to acknowledge too that the Western Midwest, Northern Plains, abundant water. So this is a little different than last year where no one had water. It was very hot. We lost a lot of moisture very, very quickly. And that has happened in some places in the Midwest this year. Just hasn't been nearly as widespread. Thinking about drought coverage this year to last, a lot of places are doing a lot better. So again, just wanted to acknowledge that a soybean yield 53 and a half, 53.8, corn yield in September, and by the final count of 186 or better, mathematically totally reasonable. So let's keep that in mind as again we manage risk, what to do with rallies. And I think at least to ag resource, forward-looking, big picture, global supply and demand, we're thinking about what happens in the southern hemisphere. Because again, for context, it is Chinese deal or weather threat, supply dislocation that bull these markets up for any lasting period of time. So I think once pretty soon after the USDA releases its September WASDE, we are moving our focus to southern hemisphere weather, which has looked very good in Argentina and our Australia, which is weighing on the wheat market. Wheat production potential there is very high, but it is the beginning of the planting season in Brazil, Argentina, and Eastern Paraguay. So it's the timing that regular rains do finally arrive to central and northern Brazil. And so it's just one model. The model's not in terribly great agreement. This is the European model, which historically does perform pretty well. On the left, you have got 1 to 10 day rainfall accumulation, and on the right, you've got 11 to 15 day rainfall accumulation. So you can kind of see that we're starting to introduce more humidity. In some places, if this is correct, you've got rainfall of 1 inch, maybe 2 or 3 inches. In places like Paraná, Santa Catarina, scattered across Mato Grosso to Sul and Mato Grosso. And so I think if this is correct, and you do see this kind of rain, you're going to have planting begin in bulk in these parts of the world. So why that matters, and something we have hinted before, is again fast forwarding 100 days, 4 or 5 months. If soybeans are planted in Brazil prior to October, 1st or 5th, those beans will be harvested December, January. So that's the window for soybean export opportunity. That's why our focus is going to shift pretty quick to southern hemisphere weather pretty soon after the USDA releases its September WASDE. So otherwise today, I think not a lot to sink your teeth into. We are probably going to be choppy in the markets for another 2 or 3 days until we get that USDA report. But again, what do you do with recoveries? Just wanted to communicate, once again, reiterate, we're not seeing big picture glaring climate threats in South America. Lots of grain coming at central U.S. physical cash markets, North American physical cash markets. So kind of be prepared to make some moves if we do get pre or post USDA rallies and recovery. So as usual, all the best in the markets today. $1 gets you in for 30 days. Full analysis of USDA's report. We've got updated corn, soybean yields by state published in the next couple of days. So check that out. And we'll be back tomorrow with all the information for the grain markets. Thanks for watching.